Welcome to episode 16 of my Robinhood Portfolio. And today, the portfolio has been up, the portfolio has been down. It's been all over the place with all these earnings reports coming out. And guys, we're going to dive right into it. We're going to talk about the market. We're going to talk about my thoughts on the market. We're going to talk about it all. But right now, the portfolio is minus $5. And the after hours, I am up $3 currently. So let's just talk about what's been going on. You know, everybody's been talking about all these earnings reports that's been coming out. My Seeking Alpha app has been blowing up with all these earnings reports. Are companies beating their revenues, or how does the market look? And right now, from what I can tell, there's been a lot of these companies that are beating their earnings reports, but these stocks have been going down. It hasn't been what was going on back throughout the last couple of earnings reports with some of these companies when they report and the stock just jumps up. But a lot of these stocks that I've been reporting, I've seen some really good reports and the stock goes down for some reason. It could be low guidance. It can be something that investors don't like during an earnings call. It can be a lot of things. But as you can see from my portfolio for the week, we are up $139, and for the month, we are up about $458. So, yeah, it's these earnings reports that's been coming out, and I think the biggest one that had a lot of impact was Facebook. I know I talked about how Amazon was going to be the big one that everybody waited for, and that everybody just wanted to see how they were going to beat their earnings, and they really did crush their earnings. And I had an opportunity to look at Amazon and evaluate it and see what I want to do with it, and I took the money, guys. I took the money. So Amazon is not in my portfolio at this point in time because I do a lot of swing trading with Amazon. I think I've mentioned before that I'm normally in and out of Amazon due to the valuation levels. And I love the stock. I would love to hold on to the stock. But I think as of right now, I think the time for holding on to Amazon has long passed. Had I held on to Amazon when it was about $900, I would be up huge money right now. But right now, I have bought Amazon. I've been swing trading Amazon. I've made my money off Amazon, but again, if you don't hold on to the stock for a year, you get those tax penalties. So that's what you really want to do. You want to hold on to your stocks for a year. So again, I talked about how Facebook was the big one that everybody was looking at, and unfortunately, Facebook declined. It had one of its worst declines in the history of the stock market. I think there was nothing. I think it fell some 20%, which was really absurd. I think that Facebook still has a lot more growth to them. You know, they do own Instagram, they do own WhatsApp or WhatsApp app. I can't pronounce it right, but they still have a niche. They still have a niche in today's world, and people still use social media. So you know, they didn't have a good quarter. They didn't have a good quarter, and a lot of investors got they sold. They got out. A lot of investors wanted out, and a lot of those sell points when in the after hours when the stock drops, and after the earnings report came out, the stock dropped, and then it hit a certain level, and then that chain of events from other investors that have their portfolios managed by these, you know, computers and stuff, they ended up selling. So, you know, it's like a chain reaction, guys. It's like a chain reaction. The stock goes down once it hits a certain level, and then the computer says, oh, all right, it's at this level, let me sell off here. A whole bunch of stop losses kicked in, and then next thing you know, Facebook's down 20%. But let's jump into my portfolio. We're not going to just waste any more time. We're going to jump right into my portfolio. Like I said, I sold Amazon, and you know, I saw a weakness by doing that because, again, I do love Amazon a lot, but I decided to take the money that Amazon got almost to $1,900. I sold. I looked at it. I was up about $130, and I sold it, and I threw that money into Apple. The thing I want to talk about is that even though these, I mentioned before in my last video, I want to put my money where the rich are, where rich people are putting their money. But in a sense, I mean, what I really meant to say is that even though I do want to do that, I have to face the fact that I'm not rich. I'm not rich by any means. So when stocks get to a certain point, I look at it and then I sell. Most people say, why don't you hold on to your stocks for a year, blah, blah, blah. Sometimes, guys, you got to know when to take the money. You got to know when to take the money. This bull market has been, I think this is the longest bull market ever. Like right now, I think we might be in the second longest bull market ever, or if not the longest bull market ever. And you got to know when to take money, guys. You got to know when to take the money. Do not be scared. Do not be greedy in this market. I'm personally not greedy, but when we talk about the valuation levels, I know I've said that a lot of these valuation levels for Apple and Amazon and Microsoft, all this other stuff doesn't mean much to me because I'm very bullish on them. But again, I'm not rich, and I do like to take the money at certain points, and Amazon spiked up and I sold. With that being said, if I looked at today, if you were to ask me, oh, okay, you can only pick one stock, which stock would you pick? Would you pick, one share of Amazon, or would you buy a couple of shares of Apple? I would probably say Apple. And the reason why is because even though the valuation levels for these stocks don't really matter to me, I feel like if I like better valuation levels than I like Apple's valuation level right now more than Amazon if I had to choose. That's what I'm saying. If I have to choose, okay, you can only pick one stock. We're forcing you to buy either one share of Amazon or 10 shares of Apple. I think I would buy 10 shares of Apple. Now, I don't know what you guys would do. You guys would probably say, I like Amazon. I'm going with one share of Amazon, but Amazon is $1,800. Amazon is $1,800, and it's not a cheap stock. It's not. It's not a cheap stock. It's not a stock that I can accumulate a lot of shares of at this point in time, because one stock is virtually going to cost you $2,000, and it's not like I have $2,000 to just keep buying stocks from Amazon. I would love to do that, but it's not in my power to do so at this point in time. But with that being said, I do like my portfolio, how it's set up right now. I did see a weakness in my loss of Amazon and that huge retail market, that huge retail giant. So I ended up buying Raw Greens. This is a new stock into my portfolio. I really wish I would have got into this stock when it was $60 thanks to the Amazon scare and healthcare. I looked at they have not been having a good year, but I'm not really concerned about their yearly totals because this is a good stock, guys. I think Walgreens is a good stock. This is when the scare happened. I think it got all the way down to like $59. That was a steal. I bought it somewhere. I bought it high. Right now, we're just going to go look at the stats for portfolio diversity of 8%. I'm up $16 on them. I feel like this stock can reach to around the 70s and 80s, but yeah, it's a good retail stock that pays a pretty good dividend. And I chose them over Walmart because I know even though I was bullish on Walmart, Walgreens is cheaper and they have a pretty comparable dividend payout right now. I think the dividend for Walgreens is about 46 cents and Walmart is about 51 cents, but I can get a lot of shares from Walgreens. They're still at a good buying point. I think anything around the low to mid 60s for Walgreens is a good buy, but yeah, we're gonna that's pretty much solves the retail problem with my portfolio. I wanted a retail stock. Apple, I've increased my shares on. I'm down on Apple currently right now. I may have bought this a little bit high, but that is okay because I know that the rich are putting their money into this stock. I know Warren Buffett loves Apple. He's buying it up, and this stock. I mean, the stats say it's over. The stats say it's currently undervalued, but this stock can easily be $250. It's just a matter of when. We have stocks like Johnson & Johnson that's spiking up here. This is probably the best return I've had in my portfolio currently at this time. $111 for a 9% return. And then I get that nice dividend to go along with it. So yeah, guys, it's a good portfolio. There's not a lot of changes here. I know I got it. I added to some more shares to my Verizon. I think I had like 10 shares. I had completely sold out of Verizon, and I'm moving the money around. I bought a whole bunch of Walgreens shares, but then I bought Verizon again, and I guess I bought it right on time because it's beginning to spike up here. I think it's up to $52 right now. And right now, I took that money. I think I threw some more money into Apple. So I'm moving the money around. I'm starting to get clever. I want to buy more Verizon shares when it's around that $48 mark. So hopefully this thing goes back down to $48. But I hardly doubt it because Verizon is a good company and they have a little bit more growth to them than AT&T. I just look at there's a lot of stuff going on. There's a lot of stuff going on. Microsoft, tech stocks today did not do good. They are a lot of people are a little bit psyched out about this Facebook drop and Intel drop. I think the Twitter numbers for the Twitter stock did not look really good. So a lot of techs today suffered, and as you can see, all the tech stocks are down. All of them. Apple's down. Microsoft is down almost 2%. But this is why you diversify. This is why I say you should diversify your portfolio, because while the tech stocks and the tech sector is getting hit, you look at stocks like Walgreens. Walgreens is up almost 2% today. Verizon up almost 2%. Boeing Airlines up almost 1%. I mean, almost up 0.50%. Procter & Gamble still going strong. It's still going strong. Right now, I'm up $98. So this is why you want to diversify your portfolio, and you don't want to have too much tech stocks and too many discretionary stocks. You want to have the right balance. I only have 2 tech stocks in my portfolio currently at this point in time. I have 3, but I sold Amazon. But the thing is that tech's had a bad day. The tech stocks had a bad day, and I don't know about picking up any shares of Facebook. I've been in and out of Facebook. I'm just going to pull them up here. But I still don't like these valuation levels. Like, I guess when you look at a stock like Facebook, you can say, well, does it matter where you buy this? Like $174. I'm not too thrilled about that. I look at that. I don't know about that. I think the time to buy Facebook when it was around all those court hearings. I think that Mark Zuckerberg was doing. He was doing all those court hearings, and the stock got down to I think about $150. So yeah, somewhere around right there. Right there is when I love these levels right here. For $150 for Facebook, I think that is a very good steal there. But yeah, I mean, anytime there's a dip of around 20%, I think you got to jump on that. I didn't, because again, I am waiting on Apple's earnings. Right now, I'm waiting on Apple's earnings. I'm waiting to see how they are going to do. I think they should beat their earnings. They're coming out with a lot more technology. They're improving stuff. They're improving their Apple Music, and I just like the stock. I like the stock a lot. So yeah, guys. There's not a lot of change this year. I think I'm up to 10 stocks still. I like to be no more than 15 stocks in my portfolio. I think any more than 15 stocks, you have to do a lot of management. And like I said, when I look at my portfolio, I just want to quickly sweep through things and see how my stocks are doing. Boeing Airlines, I'm already up $95. So that ended up being a good buy. And yeah, I know I replaced 3M with Boeing Airlines, and that turned out to be a good decision because I'm almost up $100 on Boeing. Visa, it's still a growth stock that I like. I still am up on them. So there's not a lot to see here. I know I'm still getting those great dividends, and I'm still buying stuff, but I try, guys. Like, I want to get this portfolio up to $20,000. So I want to get this portfolio up to $20,000, and the dividends are coming in. I think I get Verizon's dividend. Let's take a look. I think I get their dividend. So yeah, August 1st, Verizon dividend, 20 shares. So I get $11 off their dividend. I think NRZ. I ended up selling NRZ, but I'm just gonna hurry up and pull it up here. I get their dividend. So these dividends are starting to sink in. I get this dividend today. Today, number of shares 30, 50 cents for a total amount of $15. So sometime today, I'm going to get paid. This portfolio is going to get paid $15, and it's going to shoot up, and it's going to probably go up. Yeah, right now it's the after hours, but it's going to shoot up, and this is why I say dividend stocks are the best. Once again, my whole portfolio pays a dividend, and I'm loving it. I enjoy these dividends and doing nothing and getting paid for it. But that's gonna cut it, guys. We're at $12,000. I might add some more money into my portfolio soon, so we can get this up to about maybe 12,500, or I might even shoot for 1,300. But I'm gonna try to do a lot to add some more money and raise my Apple shares, because I'm really bullish on Apple. I don't know how the report's going to be. I don't know if this stock is going to drop or not, but if it does, I want to be ready. I want to be ready to throw some more money into this thing, and they're increasing their dividend, and they're headed for $1 trillion market cap. But that's going to cut it, guys, and I'll see you next time.